So you may have heard of the term budget or forecast and be wondering what on earth is it and why on earth do I need it for my business? So it's not just something that the banks need, and it's not just something you do when you set up the business or you want to borrow money. They're actually tools to help you achieve your goals, to take you, it's a roadmap basically to take you from where you are to where you want to be. And in this video, I'm going to cover 3 reasons that you would need a budget for your business. So the first one is to set yourself some sales targets. And this is what we call a bottom-up budget. We would start with what you want to take out of the business. We would then put in all your admin costs, your overhead costs, so things like marketing, accounts, rent, employee costs, travel, all things like that, which will give you your gross profit. And then from your gross profit percentage, which you can work out from your previous months or years, we can then work out what your sales target should be. So for example, if you then get your sales target and it's £10,000 a month, say, and let's say you're a product business, and your average sales price is like £100 per sale, you then know that you need to sell on average 100 products a month to reach your sales target. If you're a service-based business and say your monthly fees are £200 a month, then for that sales target of £10,000, you need 50 customers or members if you're a membership. So you see where I'm going with that. You can then work it back down and see how many actual sales you need to make a month. So that's the first one. Second one is to see if you can afford something or not. So for example, if you're taking on a new team member or a new office, but you're not sure if you can afford it. Or even how to understand how the energy increases will affect you, or buying a piece of equipment. This is where a budget will help. And to be fair, I would recommend doing a cash flow forecast alongside of it as well. So here you can either do a bottom up or a top down budget, depending on your circumstances. So if you want to see, you keep your sales level at the same and you want to see how it will affect you, you do a top down one. And from here, you would pretty much do that top down. So you get to where your current sales are, your current gross profit margin. So you take out your cost of sales, get your gross profit margin. You then take out all your admin expenses that you know to get your profit. And then what you can do is you can plug in extra lines on your budget just to see how the increases will affect the bottom line. And the bottom line is literally the bottom line, which is your net profit. Or you can do it bottom up as above, so you can add in the extra expense and then get yourself a new sales target to cover that extra expense. So either way, it will tell you what you need to know. It just depends on what your circumstances are and what you're trying to answer, what question it is you're trying to answer. And then once you've done that, I'd also recommend plugging that into a cash flow forecast to take into account all the additional expenses that you will need to pay for, because some expenses won't be on the profit and loss. They won't be included in the budget. For example, if you're getting a new premises, you might need to pay a month or a quarter's rent up front. So that wouldn't be in your profit and loss, but obviously you need to plan for it in your cash flow forecast. And then the third popular reason for doing a budget is growth planning. So you want to grow your business, but you're not sure where to start. So this one is a lot more complicated, and you probably want to do, again, this in conjunction with a cash flow forecast, just to make sure you've accounted for everything. So as I said, you need to understand where you are today. So you need to take your current profit and loss report to do that. And I must stress here that it's really important to take your profit and loss where you are at the moment. There's no need to be embarrassed, no need to stress it's not good enough or anything. You need to know your starting point. It's like when you're turning on the sat nav, it starts you from home or wherever you are, and if it doesn't know where you are, it doesn't know where you're going. So same with this, you need to know where you are, no warts and all, as they say. And then I'll do a bottom-up budget, as we've spoken about before. So work out what the end goal is, where you want to get to, and then you can plot that out. So you start with today's expenses and you think about what else you're going to need over that period, what people you're going to need, and therefore all the people costs that come with it, not just salaries, but you've got obviously national insurance, any software subscriptions, they're going to need laptops, computers, what tools are they going to need, what else goes with a person. And the same for everything else. Think about if you need bigger premises, do you need extra software overall? Have you got a new service line, so do you need more costs for that to develop it? All the things. And then you can do a bottom-up budget then to get your new sales target. So then you've got where you are now and where you want to be. But obviously you're not going to do that jump overnight. It's not going to happen. So then you need to break it down into targets for years, potentially, if you're looking quite a way in advance and quite a big growth, or months, however it works for you. And then you can look at the growth pattern over the last year or few years, and then you can apply that and see how that's going to go. If you've got a new line or something, growth might speed up. So it's a case of working out what you think is going to happen and realistically how it's going to grow over the next few years. So you've got some targets. And then, as before, you can drill down and you can get some quantity targets for how many customers you need or how many sales you need and things like that. So I will say before we finish up, there's no point in setting a budget, sticking it in the drawer and forgetting about it. You need to measure your performance against it. You need to be accountable and reviewing it, looking at what works, what doesn't work, what figures have you got wrong, what figures have you got right. In Xero, there's a really handy tool called Budget Manager. So you can put your budget in and then you can run your report every month or whenever you want to, every quarter. I'd say every quarter as a minimum. And you can look there at your actual versus what you thought may happen. And if you are a data lover, you can take that even further and you can take it into full management accounts. And this is why you'd want management accounts, because then you can analyze everything in a lot more detail and you can really understand what's going on in your business. You can set KPIs based on the targets and what you're trying to achieve. So you can really drill down into that nitty-gritty and get a better understanding of what's going on in your business and how you're going to achieve it. And it's also worth noting that a budget is a prediction. Same with the cash flow forecast. They're what you want to happen or what you think will happen, depending on what happened in the past and what you know. So therefore, they can never be 100% accurate. So even if you're continuing exactly as you are and you're just forecasting the next 2 years, things change. Costs increase. We've seen that. So, and of course your prices should too. But that's for another day. That we have got a budget on raising your a blog and a video even on raising your prices. So go check that one out as well if you haven't risen. God, can't get my words out this morning. If you haven't I can't even get that word out. If you haven't done it in a while, go and check the blog out. You can adjust your budget as things change, and that's totally okay to do. It's a working document to help you plan, and it helps you to motivate yourself as well. And you want to strive for goals, but you want to set realistic goals so that you're not demotivated. And last point before I finish up, it's definitely not a failure if you do not hit your targets. You're on your way to them. You are working towards them. So, as I said before, be realistic. Don't be over the top. Your goals should scare you, but not silly scare you, just like a little scare you. So you've got something to work to. And if they don't scare you even a little bit, then they're clearly not the right targets. So push them up. So yeah, be open, be flexible to change, and just use it as a working document. Now, obviously, I've gone through that really quickly, and I appreciate that you didn't set up your business to look at numbers. And also, I haven't even gone into the fact of tax and your tax, company tax, anything like that. So I hope it's given you an idea of what's possible. And obviously, we did set up our business, or I set up my business to do the numbers. So if you need help with these things, that's what we're here for. We can help you get those questions that you've got answered. We can help you work out what you need to do and how you're going to do it. So if you want to have a chat with us about budgets and helping you set some targets or helping you to work out a growth plan or anything like that, we've got you covered. Get in touch.